Welcome back to the channel, and thank you for joining me. I'm Algabot, and in this video we're going to explore an expert advisor for MetaTrader 5 called Money Flow Pullback Trend. This is a volume-aware, trend-following approach that waits for a healthy pullback before joining an established trend. It leans on the Money Flow Index, a volume-weighted momentum oscillator, together with two moving averages that define the trend direction. By the end, you'll understand how it reads the market, how it manages risk, and how the code behind it actually works. Remember, this is educational information only and not financial advice. Let's start with the big picture. Money Flow Pullback Trend is designed to do one specific thing: join an established trend after the market takes a breather. Rather than chasing every move, it waits patiently for price to pull back, and then it looks for evidence that the trend is ready to continue. The engine behind that decision is the Money Flow Index, often shortened to MFI. You can think of it as a volume-weighted cousin of the more familiar Relative Strength Index. Because it factors in volume, it will not turn back up on a dip unless real buying interest flows back into the market. That single detail helps the strategy filter out shallow, low-conviction bounces that price alone might mistake for a genuine continuation. Layered on top of that are two exponential moving averages, a fast one and a slow one. Together they describe whether the market is trending up or down, and the strategy only ever trades in that direction. In an uptrend it looks to buy dips, in a downtrend it looks to sell rallies. It never fights the prevailing trend. Risk is handled with the average true range, a common measure of volatility. The stop loss is placed a set multiple of the ATR away from entry. The take profit is a fixed multiple of that risk, and a trailing stop can follow the trade as it moves in the intended direction. As for who this style suits, it tends to appeal to patient, rules-based traders who prefer a defined, mechanical process over discretionary decisions. The default settings point toward a liquid currency pair such as PUST on the 1-hour chart, though the logic is timeframe agnostic. And as always, trading carries real risk, and losses are a normal part of any strategy. Now let's walk through the logic step by step, and I'll keep it in plain English. Everything begins with the trend filter. The strategy compares a fast exponential moving average, set to 21 periods by default, against a slower one set to 55. When the fast average sits above the slow average and price is trading above the slow average, the market is considered to be in an uptrend. When the fast average sits below the slow average and price is below it, that's a downtrend. If neither is true, the strategy simply stands aside. Once an uptrend is in place, the strategy watches the money flow index for a specific two-part behavior. First, money flow must cool off. The MFI dips down toward its mid-zone, which by default sits around 45, telling us buyers have eased back during the pullback. Then money flow must resume. On the very next reading, the MFI crosses back up through that 45 line, showing that buying volume is returning. Crucially, the MFI must still be below its upper guard of 80, so the strategy avoids buying into an already overheated move. The final piece is price confirmation. The bar that just closed must be a bullish bar, closing higher than it opened, and it must close back above the fast-moving average. When the trend, the money flow resumption, and the price confirmation all line up, the strategy opens a long position. The short side is a mirror image. In a downtrend, the MFI must first warm up toward the mirror line at 55, then fade back down through it, all while staying above the lower guard of 20. The closing bar must be bearish and close below the fast average. When those align, the strategy opens a short. Risk management is fully defined before entry. The stop loss is placed 1.5 times the ATR away from the entry price. The take profit is then set at a fixed reward-to-risk multiple, 2 to 1 by default, meaning the profit target sits twice as far away as the stop. On top of that, an ATR trailing stop follows the position, set to 2 times the ATR, and it only ever moves in the trade's favor, never loosening. The strategy also holds just one position at a time and skips any signal when the spread is wider than the allowed maximum. All of these decisions are made on closed bars only, so nothing repaints. Let's look at the actual MetaTrader code, the way it appears in MetaEditor. At the top are the inputs you can adjust. EmaFast and EmaSlow set the two moving average periods, 21 and 55 by default. MFI period is the money flow index length, 14. MfiMidline is the 45 level where pullbacks are measured, and MfiGuard is the 80 level that keeps the strategy out of overheated conditions. ATR multiple and reward risk shape the risk, the stop distance as a multiple of ATR, and the profit target as a multiple of that risk. Just below, the code sets a lower band equal to the midline for longs, and an upper band, 100 minus the midline, for shorts. Now the long block. The Boolean long resume is true when the previous MFI reading was below the lower band. The current reading has crossed back up to or above it, and it is still below the guard. If that is true, and we are in an uptrend, and the closed bar is bullish, and its close is back above the fast EMA, the strategy prepares a buy. It reads the ask price as the entry, sets the stop 1.5 ATR below, measures that risk, sets the take profit at 2 times the risk above entry, and calls trade.buy. The short block is the exact mirror. Short MFI resume checks that MFI was above the upper band and has faded back down through it while staying above the lower guard. In a downtrend, with a bearish closing bar below the fast EMA, the strategy reads the bid as the entry, places the stop 1.5 ATR above, and sets the take profit 2 times the risk below before calling trade.sell. Both sides follow identical, symmetrical rules. Now let's bring the logic to life on a chart. On screen you can see a GPUST illustration. Riding on top of the candles are the 2 exponential moving averages, the fast 21 in blue and the slow 55 in gray. Below the price, in the lower panel, is the Money Flow Index, with its 45 long resume line, its 55 mirror line, and the upper and lower guards at 80 and 20. Watch the opening candles. Price is stepping higher, the fast average is above the slow average, and price is holding above both. That's our uptrend, the only environment in which the strategy will consider a long. During this push, notice the Money Flow Index up in the 60s and 70s, confirming that real buying volume is behind the move. Then the market pauses. Over the next couple of candles, price eases back and dips under the fast average. This is the healthy pullback the strategy is waiting for. Look at the lower panel. The Money Flow Index cools off and slips below its 45 midline. Buyers have stepped back for a moment, and money flow has genuinely cooled, not just price. Now comes the moment of confirmation. On the next candle, a strong bullish bar closes back above the fast average, and at the same time the Money Flow Index climbs back up through the 45 line, showing that buying volume is resuming. The trend agrees, the money flow agrees, and the price closes with the trend. That's where you see the buy entry marker appear on the chart. With the long open, risk is defined immediately. The stop loss sits a set multiple of the ATR below the entry, just under the pullback low, and the take profit is placed twice that distance away, reflecting the 2-to-1 reward to risk setting. From here, watch price resume its climb. The following candles push higher with the trend, money flow stays firm, and price advances until it reaches the take profit target, where the trade is closed for a gain in this illustration. Now the character of the market changes. Price stalls near its high and begins to roll over. A couple of candles later, the fast average crosses below the slow average and price drops beneath both. The trend has flipped to a downtrend, and the strategy now switches to looking only for short continuations. Notice how, even as money flow fell earlier during the top, the trend filter kept the strategy patient. It would not sell until a proper downtrend was confirmed. Inside that downtrend, price stages a counter-trend rally. Over the next 2 candles, price ticks back up toward the fast average, and in the lower panel the Money Flow Index warms up and pushes above its 55 mirror line. This is the rally the strategy wants to sell into, but only once it shows signs of fading. That fade arrives on the next candle. A bearish bar closes back below the fast average, and the Money Flow Index rolls over and drops back down through the 55 line, telling us the counter-trend buying has run out of volume. The downtrend is intact, the money flow is fading, and the bar closes with the trend. That's where the sell entry marker appears. Once again, risk is framed right away. The stop loss is placed a multiple of the ATR above the entry, just over the rally high, and the take profit sits twice that distance below. Price then continues lower with the trend, candle after candle, until it reaches the take profit target and the short is closed in this example. So across a single chart you've seen the complete, symmetrical cycle. Buy the dip in an uptrend, sell the rally in a downtrend. each one confirmed not by price alone, but by volume through the money flow index, and each one framed by a clear, predefined stop and target. Of course, not every signal plays out this cleanly, and losing trades are a normal part of the process. And that brings us to the end of our walkthrough. Today we explored Money Flow Pullback Trend, an expert advisor that combines a two-moving average trend filter with a volume-weighted money flow index to join established trends on healthy pullbacks. We covered the entry and exit logic, stepped through the MetaTrader code for both the long and short sides, and watched a full buy and sell cycle unfold on the chart. Remember, everything here is educational information only, and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the strategy you'd like me to analyze next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.